All right, everyone. So we're going to pick back up here with Chapter 5, Pattern 3, Moving Average and Volume Weighted Average Price VWAP Pullbacks. All right, so a moving average VWAP pullback is definitely different than a bull flag or a flat top breakout. There are times where a bull flag will also kind of be a moving average pullback or a VWAP pullback where during the pullback candles, it actually pulls right back to one of those levels. And then we would say that was also a dip off volume weighted average price. But to sort of identify this as its own setup, the moving average pullback or the VWAP pullback typically happens when either it's sold off quite a bit more than what would be typical for a good bull flag and is now kind of resting on that moving average. So as you can see here from this sort of little chart, this was a bull flag right here and right off the 9 moving average. And then down here, again, this is kind of a, it's a bull flag, but it's a longer one. It's not quite as clean. It sort of is resting here on the 9 moving average. And because it's pulled back so much, probably people have lost interest in it a little bit. So the first candle to make a new high doesn't get the same level of follow through, then it drops back down. And then as it curls here, this is where it's kind of a curling off of that moving average or the volume weighted average price. So moving average pullback usually has the following characteristics: 3+ green candles moving up very quickly, followed by usually 2 or more red candles of consolidation above the 9 EMA. And it may start out as a bull flag or even start out as a flat top breakout, but that ends up either having a false break or just kind of pulling back a little bit more, consolidating for a longer period of time. And then at that point, it's a failed bull flag or it's just not really as strong. And then that's where we start to just look at it as a moving average pullback. A perfect 5-minute pullback will pull back right to the 9 EMA on the 5-minute chart, as sometimes these will continue to fade all the way back to the VWAP. And that means the new entry is going to be around the support of the volume weighted average price. The only problem with this setup is that the entry point's not always very clear. And that's because the first candle to make a new high is no longer as significant because we're kind of experiencing just general consolidation. And so for that reason, sometimes we'll end up waiting to take our entry for the price to really kind of break back out to the upside over one of the more critical levels, perhaps a pivot, which is something we'll talk about in a moment. So in this case here, this is kind of a good example where this stock squeezed up at the open and then kind of pulled back sharply. Now it pulled all the way back down to the 9 moving average. The first 5-minute candle made a new high, but then came back down. So it sort of, started to break out and then failed. And that would have been right down in here. And then it kind of bases out and gives it another try. As it breaks over that level, the high of that red candle, there it starts to open up a little more. And then it pulls back, and now we're having a little bit more of a proper 1-minute pullback after it's a fresh breakout. It curls back up to the high, it pulls back again just for a moment, and then pops through, looks like about $3.10 or something like that. So right around here. Then it squeezes up to 340, 1-minute pullback, squeezes up to 360. Now we're getting a little bit of a 5-minute pullback. It kind of goes higher. And then in this area, we're back to a pullback on the 5-minute, kind of around the moving average. So this second one is a little bit more of a traditional bull flag, whereas the first one, because it's a failed bull flag, I start kind of looking at it a little bit more as a moving average pullback. Again, generally when we're talking about moving average pullbacks, we're talking about bull flags that are just kind of not clean. Here's another one in this area right here, where it had such an extended move from 2 all the way to 550 or so, that when it pulled back, it had a really sharp pullback. And that's not uncommon that you'll see a really big move and then a really sharp pullback. So now the first candle to make a new high, it was a high of over 5 and then it pulls back down to like 360 or whatever. So, it's a big pullback. It does bounce back up, but then kind of pulls back again. You can see on the 1-minute chart how it actually got below its 20 moving average. It reclaimed it, it broke back below it, and then as it surged up here, this is where things started to look a little bit stronger as we got that curl up to 450, and then to 5, and then, clean follow through. But initially it was a little choppy there because it had pulled back so much. Here's another one. This is a little bit of a different example where you did have kind of a premature bull flag right here up very high. And at that time, a couple of the reasons we would have been cautious about trading that bull flag was because it was extended off the 9 moving average. A perfect bull flag usually almost taps the 9 moving average before, going higher. So a little extended, it does surge up to 18. It then does a little bit of a false breakout here, and then it kind of sells off. So it's sort of a flat top there with 2 taps at 18. Then it kind of comes a little lower, and at this point, this is a very typical type of moving average pullback where you might think, should I be buying it here? That candle made a new high, but I don't know because this was a false breakout. And then do I buy it here? Well, this candle made a new high. I don't know. So where is the obvious place? In this situation, this particular chart, the obvious place is really over 18. But as it starts to show some real strength here with that volume coming in, we would have been able to visualize that volume as we read the tape. And as we saw it squeezing up, that would have been possibly an early indicator to jump in. This is, of course, a 5-minute chart, so we don't know whether or not there was a 1-minute micro pullback inside this 5-minute candle right here. And this is another sort of moving average, not a moving average pullback, but a moving average pop, where it curls up to the moving average here and then kind of fades off that level. So whether it's a moving average pop or a VWAP, the volume weighted average price, we're going to talk about pretty extensively when we get into a couple of our classes specific to trading volume weighted average price VWAP breakouts and VWAP fades and dips off the VWAP. But it's a very similar chart pattern, with the exception that when a stock usually comes all the way down to VWAP, oftentimes that's a pretty big pullback if a stock has been quite strong. I'm not sure if I have a good example just off the top of my head. I'm opening my charts here, but just off the top of my head of a fade well, actually this is well, as it turns out, this one's not a terrible example here on Lizzie, which is the stock that we were watching yesterday. So Lizzie here, this actually ended up being a moving average bounce off VWAP right there. So see how this pulled back right here on this first pullback? This was pretty reasonably, bull flag and off of both the 9 and the VWAP. So that was a bull flag with moving average support right underneath it. This pullback here was to the 9. It did a false breakout and went higher. It came back down and bounced off the VWAP, and then from there at $8 has gone now up to 10 or just about. So that ends up being a little bit more of the volume weighted average price kind of curl. So again, we look at both the 9 EMA and then the VWAP as 2 potential places where we might find support if a stock starts to base out there. And in this case, you can see that break through 9 also could have been an okay place to take an entry. It surged up to 940 on the 5-minute chart, but you can see it hit actually 911, then it pulled back to 879, then it popped up to 940, and then dropped to 892 before popping up to 988. So this one actually is a little choppy on the 1-minute chart. It doesn't show really clean and clear entries, and even the 5-minute sort of reflects that in some of these green doji candles. So it's sometimes when, oh, sorry about that, my video's in the way. So it's sometimes when a stock is getting a bit more extended here, or just happens to be a little choppier, that we'll end up seeing these pullbacks down to the volume weighted average price or the moving average, because traders are just getting a little hesitant buying the first candles to make a new high because they kind of keep failing, and just sort of you start to sort of get some choppiness there. And again, to the short side, in the case of GME yesterday, I'm sure we could find some other examples of moving average pops where it was selling off, then kind of comes up to the moving average. It's not really a perfect bear flag. It's sort of back up to the moving average, then it flushes down. Sort of back up and then sort of flushes down. So it's a little bit more of a pattern that you'll notice kind of when you step back and just kind of say, well, what is this stock doing? And it appears that it's holding this sort of moving average line, that it's generally trending up, but it pulls back a bit. It's not really clean to where it pulls back to, but then it does go ahead and break and move higher. Typically, the strongest stocks that I trade, we won't be doing a lot of moving average pullbacks on them because they really they're so strong that they have those brief bull flags and then rip higher, or brief micro pullbacks and then rip higher. A moving average pullback is definitely a little bit more of a sign that the stock is struggling a little bit. So again, though, this is just a brief example of this pattern, which you'll see more of as we continue on through the classes. So with that, we're going to go on to Chapter 5 and Pattern 4, which is the ABCD pattern, a pattern which sometimes does correspond as a moving average pullback or around the VWAP, but is kind of combining both a bull flag and a moving average pullback into what can be a super strong setup.